Hello, Oracles! So who bought some of that sweet fudge today? I know I bought some of that dip this morning. I kept on adding to Tesla as the day went on, dipping down over 9%. That was nuts. So I added all the way down, had a buy set in for my IRA around 845. Just missed it, not a big deal. I've already bought a couple in there as it is. Bought some Palantir also today, down at around 12.18. So it was a great day, and today isn't exactly the reason why you do not sell and on days like this. Just don't panic sell. It's going to turn around. Now, that doesn't mean that we won't turn around and sell off again tomorrow. Don't forget, we still have a day and a half of trading left before we get the Fed's decision from their meeting over the next 2 days. That decision comes out, we will hear from Powell at 2 o'clock on Wednesday. 2 o'clock Eastern time is when the news comes out, and then he will have a press conference at 2:30. So we'll see more about it then. So there could be some uncertainty and some more selling off over the next couple of days. But after that, I'm anticipating at least some clarity for a short window of maybe a little bit of a rally. So what I'm seeing is the next couple of days, we might go a little bit lower. As we talked this morning for Tesla, there is a gap technically stemming back to October 15th that goes down to 843. We came down to 851 today, so we were pretty close. So over the next couple of days, maybe we'll dip down to that. We shall see. But because of the big gap down this morning, there is a gap up that needs to get filled to 944. So we can kind of go in both directions. Part of me is hoping that maybe we fill that 843 gap, and then on Wednesday when we get earnings, we will go up and we will clear that 944 gap and go up from there, at least for a week or two, and get a little bit of a rally and some relief from all of this red. Now, it was really nice to see that run up into the end of the day. We went from deep, deep red across all the indices to green, which is nuts, shows the volatility is definitely there. We have been head faked a lot over the last month or so. Is this another head fake? I don't know. Again, as I said, we have a couple of days of trading before we get the Fed's decision, so there could be a little volatility. And then realistically, when the rates go up, potentially in March, we've got some volatility that's going to go on between now and then. So while we saw this nice rally, I don't know how much institutional buying went into that rally. If it was, it wasn't a lot. It didn't seem like it. So I think they are all still waiting till we get the Fed rate decisions, what's going on. Once that first rate comes through, then we might start to see some more of that buying coming in once we have more clarity and an understanding as to what the rates are going to be looking like going forward. But until then, I'm still going to maintain my strategy. I currently still have over 5% cash. I've been adding as it has been dipping. It's been working out well for me. I really don't want to go below 3% cash. Never know what's going to happen. So I'm doing that, but I will continue to sell down, add more money from my cash flows on the outside, and keep on putting that into my portfolio to make sure that I have enough cash on hand to be able to be versatile and agile to take advantage of the market. And if we do happen to get some nice little rallies along the way, I'll use that as an opportunity to sell out some of my lower conviction stocks that I don't want to be holding on to long term, just to free up some more cash there as well. Because no matter what we go through, I know the next 6 months, and I say I know, not like I have a crystal ball, but I'm guessing over the next 6 months, we're going to see some volatility. Don't forget, we've got rates going up most likely. We have inflation that needs to turn down. We've been going up and up and up in inflation, so we still don't know where that's going. We have the midterm election years going on this year. So there's going to be a lot of uncertainty and changes happening over the next 6 to 8 months. So I want to make sure I have enough cash on hand to be able to roll with the market and be versatile as possible. And now one thing to pay attention to with today's hard sell-off is pay attention to your favorite stocks and where they bounced at the bottom today. Because today was a day where a lot of big money is testing supports, testing how far down stocks are going to sell off before a lot of people start buying back in. And so you can see that, and that's why my buy was put in for 845 on Tesla, because that's where I saw, that is close to where we have that gap to get filled. And I was figuring that we were going to be testing that gap to see if we were going to fill it. And we got close. Again, we got down to 851. So do we fill it over the next couple of days? We might. And if we do, then my buy will go through and I'll get it at the price that I'm looking. And so for many of you I was chatting with in the comments, a lot of people picking up a lot of different stocks, a lot of buys in for Tesla. I'm over on Twitter at OracleTim1, and I saw many of you on there as well. Lots of people buying in Tesla, buying this dip, and my strategy for those of you who are new, I fractionally buy. I don't have enough money to buy full shares regularly, but I like to dollar cost average on Tesla, and I am now doing that with all of my other high conviction stocks as well. So I determine how much money I want to put into the market on a daily basis to keep my levels proper. I have a whole spreadsheet set up with the percentages I want all of my stocks to be at, and I just invest appropriately and accordingly to keep those percentages where I want them to be. For Tesla, it is $15 every day, and then $15 for every percent that the stock drops. And that's how I can dollar cost average my way in. I don't have the opportunity to watch the market all day long or try to figure out where a bottom is. And dollar cost averaging is the wisest way to build your portfolio for long-term growth. And that's what I am doing. So doing that percentagely, is that a word, percentagely? Did I just make up a word? Percentagely, we're gonna go with that. So, that's what I use for my portfolio, which is why, I bought in I think it was $8.95, $8.86, $8.67, and $8.55 today. Those are my 4 buy-in prices. And again, I do work all day, so I can't always catch it. I set alerts on my phone to let me know when the stock hits those prices. If I'm available to be able to step away from work, I can place those buys. That's just the way I can do it. I do not have in my fractional trading account a way to set buy limits for fractional shares. So I do my best, and it has been pretty successful for me. And I do know with this massive sell-off that's been going on, there are people who are hedging portfolios, keeping a lot of extra cash on the side, maybe shorting the market a little bit with some puts. I know if anybody watches Meet Kevin, that's what he's been talking about. I don't have enough money. I don't do options. I don't know that. So if you are familiar with that and want to go that route, it is definitely an option and a way to play that part of the market. For me, dollar cost averaging is just the best way to go for me long term. And so what I'm anticipating for the market, and I'm not taking anything away from today. Today was awesome to finally see a bit of a rally going into the end of the day, but I take my emotions out and I was like, all right, I could be super excited and want to buy into this thinking, yeah, we're finally going up, but taking a step back, I'm realistic, and I know that we've got the Fed meeting coming up on Wednesday. I know that we have, the Fed going to make rates go up most likely in March. I know that we have the election coming up in September, so that's a ways away. But between now and then, it's still uncertain. So I'm still keeping myself with enough cash on hand to be able to dollar cost average just in case we dip further. And if we go green, I still add every day either way. I want to make sure that I'm as versatile as I can be with my cash. And I made a video over the weekend discussing having, cash flow coming in. Because if you've got cash flow coming in, from different areas, this way you have an opportunity to invest more into the market when the market is dipping. If you're all in, it's tough. I mean, you can hedge if you want, if you've got that kind of money in your portfolio. You can sell out and hope to time the market, which is very difficult to do. If you have time to watch it and you're good at it, then go for it. But if you are one who is playing it long and you want a dollar cost average, then having that cash flow generation is ideal for this because you can have money coming in and invest more of it into the market as it's dipping. And as I said in that video, fortunes are born during bear markets. A lot of people are, panic selling the dip today. People have been panic selling as we've been going down. The only time you actually lose money is when you sell. Again, the only time you're ever going to gain money is when you sell as well. But if you're selling when you're down, you have now guaranteed you're going to lose. And if you have been bought into stocks that you don't have high conviction in, ask yourself why. And everybody has different reasons, and everybody should be doing their own research for the stocks that you are investing in. And if you are not doing your own research, then shame on you. Make sure you're doing your own research. I do my own research. I follow a lot of other people as well. Dave Lee, Rob Maurer over at Tesla Daily, Stephen Mark Ryan. These guys do a lot of research, but I still do my own as well to make sure that what I'm investing in is what I truly believe in and what I think is going to do well long term. And if you have done your research properly on the companies that you are investing in, when you get to times like this, you will be able to take a look at that company's fundamentals and say, all right, well, this is actually a great buying opportunity for me versus getting into that emotional panic selling. Because emotional panic selling is telling me that you haven't done the research in the company, you don't have the conviction in that company long term, you're freaking out emotionally, and now you're selling because of it. Now, if you have done research in the market and you're thinking, you know what, I think the market is going to turn down a lot more over the next 2 months, so I'm making a wise and researched decision to sell now and trying to time the market to buy in later, then you know what, you've done your research and go for it. And I kudos to you for doing that research. You have done it, you have made your decision, go for it. Otherwise, if you are making decisions strictly based off of emotion or because you are seeing your portfolio falling, you need to take a step back to take your emotions out and say, all right, what are these companies that I'm invested in and why am I invested in them? I mean, honestly, I can go through every single one of my stocks in my portfolio and say, this is the reason why I bought into this. Now, granted, I am not perfect. Some of the companies I bought into were for certain reasons. Those reasons didn't come to fruition. I made a mistake and I did not sell out some of the more momentum plays. And I said, you know what? I think they're going to do well long term. I lied to myself. We make mistakes. And now I'm sitting here on a bunch of losers that I need to sell out. It happens, but it's because I was still learning along the way and we make mistakes. But the stocks that I'm in right now, I'm still not going to sell because I'm like, you know what? The whole market is turning down. The whole market will come back. And even the losers that I'm in will rebound a little bit. And at that point, I can sell them out for a loss. Won't be as much of a loss. So this way I can take that cash and then put it into some of the better plays that I want to be in. And so when it comes down to it, every day in the market is a day that you can learn. If you sold today because your emotions got there and you were afraid that you were going to lose more money, learn from it. That's all. Just take a step back. I was guilty of it, when I first started. Definitely guilty of having my emotions get in there and panic selling. So it's fine. It happens. So don't worry about it. Brush it off. Say, all right, I'm going to take the cash that I have now and I'm going to learn from this. Some mistakes are a little more expensive than others, but if you don't learn from them, then you have really lost more than anything. So make sure you learn from your mistakes, go back out there, do better. Today are the days where you buy. And again, you know what? I bought a lot today. We could certainly go down a lot more tomorrow. I will learn from that and I will do better myself. So let me know in the comments below. What did you do today? Did you buy? Did you hold? Did you sell? Let me know, and let me know the reasons why you did it, because that to me is the most important part. The reasons why you do things. If the reason you sold was because you were afraid of losing more money, not the best reason. Give me good reasons and take a step back and let me know. And let's have some good conversations here, get some education. I can learn from you guys as well, so definitely teach me and we'll talk about it. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. Again, I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, as well as all of the trades that I make on a daily basis there. Otherwise, I will see you guys all later. Have a great one.